Back from being off for a couple of weeks and didn't get a chance to trade today because I didn't have my computers all set up the way I wanted them to be. I just got back from vacation and I had them in storage. So I traded off my phone and yeah, things went pretty well. Paper trading off my phone. And I'll show you those trades that I made in a little bit. But I want to reinforce one idea about a simple way to do some of the trading that I've been teaching lately. And that is just simply that we are looking for an indication of a trend directionally one way or the other. And we're looking to find that out sometime between about 10 a.m. in the morning and about 10:45. You see, there's a multiple 15-minute candles that happen during that time. And we're going to take a look at those candles, draw some assumptions about them, and then figure out which way we want to look to see the trend might be going, and take some measurements and see if we can find some setups off those measurements. Okay, so for example, let me just start with a simple example here. Let's say that it's 9 a.m. and you have a 15-minute candle that kind of puts in a high, puts in a low, and then ends up, pretty much where it started. Okay, that's not giving you much to work with in terms of picking a direction. So what we're going to do is we're going to wait and we're going to see what the next 15-minute candle is going to bring us. Okay, and this is a typical morning. Okay, let's say that the next 15-minute candle puts in a high up here. The body is, something like this. Okay, and it puts a low down here. But basically what happens with this candle is that it winds up, and I don't know why I can't color this candle. There we go. It ends up being a green candle. Okay. So I can't seem to change the whole thing to green, but you get the picture, right? You got a green candle, meaning that the candle finished higher than where it started. Okay, so we've got a conflicting situation here which neutralizes the bias. Okay, meaning that yes, you had a lower low and you had a lower high than the first 15-minute candle, but it ended higher. Okay, so for me, that all that says is that we're not looking for a setup yet. Why? Because, simply put, the body of the candle neutralized the wicks of the candle. The wicks said downtrend, but the body said uptrend. So the two neutralize each other, and we're stuck with no trade, which is fine. We don't have to have a trade at just past 10 a.m. because, right, this is the 9:30 candle, which is 15 minutes. This is the 9:45 candle, which took another 15 minutes to form. Now it's 10 o'clock and we still don't have a bias, right? No problem. All right, let's say that for the sake of argument, the next candle also is going to, let's say the next candle puts in a higher high. I don't know why I can't do this. This is frustrating me. Okay. Puts in a higher high, leaves a green body, and puts in a higher low. Now I got something I can work with. Why? Because the body of the candle confirms the wicks. The wicks say we're going higher. Why? Because this wick took out this wick. So it's got a higher high, it's got a higher low, and it finished higher. The close was higher than the open. Okay, so everything about this trade right here, about this candle right here, is telling me let's go higher. Price is going to go higher. Now, how do I find the level that I want to trade from? Now that I know what direction I want to go long, okay, now that I know what direction I want to go in, how do I pick where to get in? Okay, well, that's the beauty of the system that I've developed. Okay, so once you've got your bias, here's what you do next. You will also be looking at a faster time frame chart. And if you were looking at a faster time frame chart, what you would see, it would be something like, let's see, for the last couple of 15-minute candles, you would be seeing something like this. Let's say you're looking at a 15-second chart, okay? And what this represents is this swing low here represents this swing low, and this swing high represents this one, this highest one, okay? We don't have, we're not showing you this first 15-minute candle because it's just not relevant. Why? Because this is a swing low right now, currently. This is the current swing low, it's current swing high, okay? And then we finished here, okay? So now what we're going to do is, since we have our swings, we have our direction, we need to set up some levels to trade off, okay? So we're going to go to the Fibonacci retracement tool, and we're going to put the high, and it is now, by the way, 10:15 exactly, okay? We're making this analysis, we're doing this analysis lightning fast at 10:15. Why? That's the 9:30 candle, that's the 9:45 candle, that's the 10 o'clock candle. It's now 10:15, and we're ready to trade, okay? But we need levels. So let's go ahead and get our Fibonacci tool. We'll put the high of the Fib tool here at the new candle. At the level is the swing high of the last candle, but we're going to start doing it here, okay? We're going to put our tool here, and we're going to bring the arrow down to the low, and we're going to move this to the right, okay? Just like that. Okay, so what do we have here? We have something that's upside down is what we have. Just take that off for a second here. I don't know why I did it that way, but it did. There we go. Okay, so what I've done is I'm showing you right now is these two panels here. One is at 0.382 of this move that we just made here. This move. This is the move that we're measuring. Okay. That's 38.2% of it. That's exactly 50% of the move. And this is 0.618% of the move. Okay. What I want to see is I want to see a number of things. But basically, I believe that because we're in an uptrend, if we come down, if price comes down into this level, right in here or right in here, it's going to bounce, and it's going to bounce very nicely. And more than likely, it's going to go up to this fib extension up here. If not just this one, then also this one before it pulls back, okay? So these are Fibonacci retracement levels and extension levels. There are more of them. There are lots more of them, but these are the ones I'm going to put up for right now for the sake of argument, okay? And what I want to show you, this is on a 2-minute chart, by the way. I'm probably going to be trading this on a 15-second chart, okay? So what we're going to see here is we're going to find price moving back into this zone, somewhere in this zone, and pivoting, okay, and bouncing. And then it's our job to go ahead and do a great entry, get to break even as soon as possible so we eliminate all risk on the trade, and then manage the trade so that we can maximize the gains on it and we get as much as we can possibly get out of it, okay? So that is basically what we do and what I teach every day on my YouTube videos, okay? So now that you've got the theory of this, let's go ahead and show you the practice, okay? So this morning's trading, I'll just show you. If I can get this set up, there we go, okay. Okay, so here's this morning's trading, all right? So in this morning's trading, the first candle was green. It had a long top wick, and it had a shorter bottom wick, but it just, you really can't tell too much from a candle like this with wicks on both sides. Even though the top wick was much higher, that is a bearish look to it. But the fact that it ended green kind of neutralized the bearish look. So I'm not making any assumptions at all about the direction based on this candle. Turns out that the next candle did do a nice push down. And because it did a nice push down, it had a lower low than this one, a lower high than this one. So the wicks are saying short, and the body is also saying short. Okay, right? So because it's finished red. Okay, so now I have a confirmed directional bias. The candle agrees with itself. In other words, it's putting in lower lows, lower highs, and it's closing under where it's open, and quite a bit lower. So it's pretty red. So I'm looking for shorts. Okay, so what did I just show you? I showed you that I took my Fibonacci retracement, in this case, to the short side, right? I'm going to erase this one. This is what it's going to look like when I'm done, but erase this one too. Okay, so I'm going to take my fib retracement tool. Okay, I'm going to start here on the 10 o'clock candle at the level of the low of the 945 candle. Okay, and I start here. I'm going to move up till I get to this level here, and I'll move over. And now I've got our levels put in here. So the thing with these levels is that there are 3 of them, and you're allowed to take a trade from any of the 3 levels, okay? Be it the 0.618, the 0.5, or the 0.382. It just has to make sense in terms of the way that price moves at any one of those levels, and the MACD, and I'll explain the MACD real quick right now. Okay, so with the way I'm doing this right now is that if this is triggering 10 o'clock, between 10:30, 10:30, 10:45, I'm using 15-second candles, okay? And I'm using MACD to get my confirmation. So what I'm looking for during this time frame is I'm looking now price at the time that I set this up at 10 o'clock. It's right here, okay, under everything, okay? So I need it to back test up to these areas. I need it to roll over either at this line or this line or this line, okay? I need to see a cross, and then I need to see price back test after this crosses, okay? Why? For confirmation, basically for confirmation. That's the type of confirmation that I need. I need a MACD cross, and then I need price to do some kind of a back test. Then I'm comfortable getting in, okay? So this is exactly what I did. I got my bias from looking at this candle, this 9:45, 15-minute long 9:45 a.m. candle relative to the opening candle. I saw that at a lower low. I saw a lower high. I saw it finish red. So the wicks are pointing down, and the candle body is also pointing down. Those 2 things are telling me we're looking for shorts. I got my fib tool, Fibonacci tool. I measured the 50% level and the levels just above and just below that for a place where price would could pivot. I watched as price came up, 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 hit the 77, which is always a strong resistance, near the top of the box. And I watched my MACD cross over here, okay? Then I waited for a price to back test, some kind of back test and roll over, something confirmed. Since it crossed again, I needed it to cross a second time, okay? A lot of times what will happen is price will just, the MACD will just kind of come up and bump against the fast line, will bump against the slow line and roll down again. In this case, it actually crossed above it for a second time. The first time was down here, okay? But I needed it to cross, because it was above it, I needed to cross the second time. So once it had done that or curled and was just about to cross, it looked like I was getting a nice pushback off of this 77 level. And by the way, this cloud right here, which is a 5-minute 789 cloud, okay, I call that my signal cloud. This is called my anchor cloud, okay. Once I had all of that in place, I was good to go. So as far as the entry, That particular entry was done at 25,629.75, I believe. No, that's wrong. It was this one. Today's date is the 8th. Yeah, that trade was on 3rd. Okay. So it was on the 8th. Okay, so it was this trade right here. So the entry on this one was 25,760 and a quarter. 25,760 and a quarter. Which was right here. 25,760 and a quarter was exactly right here. I don't know if you can see that. It's basically the second red candle here. Okay. So I took a quick, I took a very fast, let's see, 61.87 is where I got in, and for some reason, I only got 1.5 on the first half of my position, the first lot. And then I moved my stop back, and on the second lot of that position, we got down to 25,749.75, which is down here in this area, probably because it was bouncing back, and that was our first trade. So yeah, I didn't really manage that. I think my entry wasn't bad on that one, but the management of it was definitely left something to be desired. Probably could have gotten more on the first lot and on the second lot. It basically was keep holding the blue line, which is 1 minute 8, all the way down to the 26, which is another point of resistance. You can see the price often moves between 77 and 26. In this case, that's exactly what it did. Moved from 77 down to 26 and bounced. Kept going too. After it bounced up back to the 50, kept going all the way down under this 77. So it basically went 100 points from my point of entry. But I mismanaged it somehow and wasn't really able to capitalize on it very well. Too bad. All right, that's the way it goes sometimes. You can't, you can do the greatest analysis in the world, but if you don't manage the trade well, then you won't maximize your profits. So that was my mistake on that one. I did make a little bit of money on it, on paper trading it. I made 32 on the first lot, 242 on the second lot, for a total of about 275. Not too bad, but could have been a lot better. Okay, so now that we've done that, we're going to go back and look at these candles again and see if there's any other entries, okay? And there certainly was. Why? Because the candle that I just traded, when it finished at 10:15, the low was down here, that wick low was down here, 2657. The high was here, so both the low wick and the high wick were both lower. So lower low wick, lower high wick, and the body itself also confirmed red, right? So then what I did is I looked and said, okay, let's repeat exactly the same process over again. We've got a downtrend. It's still confirmed to be a downtrend. So let's take a look at the next one. So what did I do? I took my Fibonacci tool. I put it at the low of that candle, right at 10:30 sharp. And I put it at the high of that candle at 10:30 sharp. Moved it over there so that the 10:30 candle could be traded as well. Excuse me. And then that's what I had to work with there. Okay. Now, as you can see, we went above the low. And when I did it before, that candle was higher up, and I'm trying to figure out why that would have been. I did have stuff in the right place here. I know why. I used the 77 because it was a swing high that I liked. I liked that swing high to swing low. It made more sense to me when I looked at it. I saw that the move actually originated from way up here. That was the move origination, and the move completed down here. So therefore, and this is how I actually was looking at it when I was trading it. Therefore, the pivot point, the exact middle, the 0.5 pivot point was right here at 717 and a quarter. Okay. So again, what I waited for was that MACD cross on the 15-second chart, and I got it right here, and then a price back test. Okay. So it continued down to here, and then price back tested up here, just under the 26, and just between, my 0.5 and my 382. Okay. And then continuing down. So at that point, I was looking to get short somewhere around 707. Let's see where I actually did get short. Let's see where that happen. Hang on for a second here. Balance history. That is not working, folks. There we go. Balance history. Here it is. So I'm not too slick with this right now, am I? Okay. So what we had was an entry at 758. 758 was the entry at 7:15 and 40 seconds. That's not the one. Maybe it was this one. $7.13.50. Yeah, that was it. Okay, 7:13 right here. 7:13.50. That's what time. Let's see that. It doesn't show the entry time. It shows, but it just shows the entry price. $480 is what I made off that. So 713.50, and I closed at 689. Okay, 713.50, 713.50 right there. And I closed it 689, which is down here somewhere. Okay, and that was one mini, and that one we made $480 off. Yeah. Okay. So basically, that I just showed you everything. All right. I showed you how to use the 15-minute chart to determine your bias, because the wicks were lower than the wicks prior, lower high and lower low, and the body was red. So between those two things, I had a short bias. I went ahead and used the low wick low to swing high on this one. And how I knew to do that was just looking back here. I could have used this one, but this one seemed more obvious somehow. It was the beginning of the big move down right here. Okay. Right, because price kept back testing the 77 over and over again until finally it pushed down from there. So that's why I used that one. The 50% level was right here at 718. I was using my MACD, waiting for that first cross, which happened here, and then the back test, which happened up here, and then the continuation down, which got me in somewhere around this level here, 713 level, and then I traded it down until it bounced up and took me out at 89 down here. Okay, so that was my trade, and of course I was probably a little early on that. It did take me all the way down to this 26, which is basically another 100 points down. So as you can see, this one 77 to just below 77, and this one just below 26 to just above 26, so another 100 points. So the moves tend to be about 100-point moves. I mean, if you can get 50 of that, good for you. You're doing really well. Or if you can get the whole 100, you're really doing well. So anyway, that's how it works. Wanted to show you that, and show you that, yeah, these things are pretty predictable if you know what to look for, and you put your Fibonacci levels on, so that when price back tests to it, you can wait for your MACD to cross, and then get a price back test after the MACD crossed, and then a continuation in that direction. usually that'll be a really good entry point, and then you can just manage it down. You know, get to break even quickly, and then manage it down for a decent win. Even if you're just using 1 or 2 minis or just a few micros, you can make decent money. Okay, all right, that's it.